Hello and welcome to the Providence Quarterly Investment Update for October 2023. My name is Michael Ogg and I'm joined here by Mark Waite, Head of Investment Strategy at Providence. Welcome, Mark.
Thanks, Mike.
Mark, I thought we'd start with the title of the GOS, the Global Outlook and Strategy. Volatility creates opportunity. Can you please explain that further?
So in my experience, in periods like we've had during the third quarter, where equity markets have been quite weak, there's been lots of volatility in the market, it's an environment of high uncertainty. And the measure of those types of things is a higher degree of the VIX rate in terms of implied volatility for equities, wider credit spreads, etc., etc. Those types of environment are akin to a lot of uncertainty and a lot of opportunity, because often you'll find that all asset classes will move lower in price and there'll be an opportunity to reposition portfolios and take advantage of those price movements.
So Mark, there's a lot going on in markets at the moment. What themes have changed in the last quarter compared to the first two quarters?
So I think one important theme that has changed is geopolitics, and we've been concerned about that for a while, so that's come to the fore. A second one that's been really important has been US bond yields, and you've seen quite a sort of sharp move higher in US bond yields. They had been holding in around about 4%, and they marched higher to 4.5% by the end of the quarter, and have actually touched 5% as we enter the sort of fourth quarter. And that's been a really big dynamic that's had large implications across all asset classes because of the move in the risk-free rate.
So there have been obviously very big moves in volatility and interest rates. What do you think is causing this volatility?
So I think the change in sort of interest rates and the discount rate's very important for all asset classes. It's been around the sort of ever-increasing US budget expenditure. And if you look at it on this chart, as a percentage of GDP, it's now moved and been consistently above 40% of GDP, whereas historically it was much closer to 30% of GDP. In addition, during this second quarter, we had the US regional banking crisis. And that was really driven by losses on banks' balance sheet from two assets that have been negatively impacted by higher interest rates, namely real estate and US treasuries. So there's been less demand for US treasuries from regional banks. And because of the geopolitics that we talked about before, there's also been less demand for US treasuries from international buyers. And that's led to a move higher in yield as the government continues spending money and has to increase issuance of US treasuries.
Mark, just on that, I mean, higher yields, I always think of higher yields effects on property, etc. What sort of effect is that having on the property market, if any?
Well, the epicenter of sort of the property downturn is the US market. And recently I was looking at some research and they were saying that effectively, if you look across the whole US office sector, income from office properties is down 20% from the peak that we saw prior. And second of all, if you look at US real estate office prices in general, they're likely to be down between 40 and 60%. So it's a very sort of long time, long impact concern in terms of properties. That's fed over into markets like Australia as well. And so you've seen sort of pressure on some of the listed property players. And indeed, whilst we didn't see much change in unlisted property prices last year, you've started to see some negative price momentum in terms of properties trading, a lot of them sort of down as much as 20% from their peak levels.
Just move on to geopolitics. There's a lot of noise at the moment, a lot of things going on in markets. Obviously, we're reading it every day. What sort of impact is that having on investments and asset prices?
Well, firstly, I'd say obviously the Israeli-Hamas war is very concerning and something that's very much front of mind from our perspective. But I think in terms of looking at how it impacts the financial markets, what we have seen is you've seen a much stronger US dollar. And then importantly, one asset that we've been invested in exactly for these types of moments in time has been gold. And once again, that's really served a very important purpose in terms of portfolios, providing an anchor, providing stability. And you've seen the gold price have a pretty swift move up towards sort of almost $2,000 an ounce recently. So it's provided some really good protection, as well as the fact that whilst we hold gold, the Australian dollar price has risen even higher because of the weak Australian dollar.
And Mark, just given all the geopolitics, the volatility, the higher bond yields, what implications does that have for portfolio construction and the different investments we're looking at Providence?
So what we've looked at is sort of as you've seen a regime change in terms of interest rates move from effectively being zero to move higher, some higher risk premiums in markets. You can see on the chart that we're showing on the screen that there's some interesting asset classes that really sort of stand out in terms of their underlying yield. And one of those is credit. So whilst we've had some exposure to credit, as we've sort of seen credit spreads move out a little bit wider, We've recently chosen 2 managers, one international and one domestic, that we'll be allocating to, that will allow us to continue to increase the yield of portfolios and to harvest more yield in those portfolios, as we think even after adjusting for the risk of some defaults, it's quite a compelling investment compared to equities at this point in time.
And Mark, just a final word on the portfolios and how we're seeing things?
Well, I think as always, Providence is very much sort of based on the idea of the preservation and protection of capital. So the portfolios remain quite liquid, well diversified, but we're actually really excited about the opportunities that this volatility creates at the moment. And that's very much in terms of why we have a title where volatility creates opportunity in the GOS.
Thank you, Mark, and thank you for joining us. I hope you enjoyed the discussion, and I look forward to sharing our views and ideas next time. Until then, thank you.